Hello everyone, welcome back into another video. In this video, I'm going to show you how to use our one setup for life for the New York Open reversal for bullish price action. Right, so first, you need to identify our daily bias for the day. Are we going to continue higher or are we going to continue lower? Are we taking out a liquidity or are we filling out an imbalance? Looking at the 4-hour time frame, we can see that the price is overall bullish. We have here retracement, continuation higher, and at the moment we are having a retracement and we are most likely to continue moving higher. We have here a 4-hour fair value gap. Let's mark it out. This is a 4-hour fair value gap. Remember, if we are overall bullish, price action should respect bullish PD arrays. As we can see right here, price went lower and beautifully respected this bullish fair value gap right here. And now it has continued moving higher. We can clearly see price rejected going lower. We have here very long wicks rejecting to go lower. Price continued higher. Once again, price came back into this 4-hour fair value gap and we can see price reacting strongly from this bullish PD array. Let's mark it out. Now let's go into the 1-hour time frame. Right here is our guide for our setup. Since we are looking for bullish price action, we want to see price go down first, reaching into a higher time frame point of interest or a higher time frame liquidity, and going into the lower time frame, we can see a market structure shift and a fair value gap. This is what we are looking for. We want to see price go down first before looking for an entry setup. Alright, so now let's wait inside our New York Killzone. We're waiting for the price to reach a higher time frame point of interest or a liquidity. We have here a higher time frame liquidity. Let's mark it out. Price might go down into this sell-side liquidity right here and reach into this 4-hour fair value gap. This is our higher time frame point of interest. And as we can see, price is trying to go lower. We want this liquidity to be taken at the same time reacting into this higher time frame point of interest. And alright, so as we can see right here, price took out this higher time frame sell-side liquidity at the same time reacting into this 4-hour fair value gap. This is our higher time frame point of interest, this one right here. And as we can see, price clearly rejected going lower. We have here a candle wick, which means that this is only a manipulation. Price is not willing to continue going lower since we have here a candle rejection. Now, let's go into the 5-minute time frame. Looking at the 5-minute time frame, we have here our market structure shift. Let's mark it out. This is the last swing high that has taken out a liquidity. Alright, we have here our last swing high that has taken out a liquidity. This is our market structure shift, but if you look closely, this is kind of far from this swing low right here. And we also have here a 5-minute fair value gap. Let's try to look into the lower time frame to see if we can have any setup in the lower time frame. Right, so right here we have a fair value gap. Remember, this fair value gap, we can use this as a inverse fair value gap. Sometimes, for examples just like this one, when we have our last swing high that has taken out the liquidity and is kind of far from our sell side liquidity, sometimes the price will left you out. When price starts to go into this swing high right here, it will no longer retrace and then it will continue going higher. It will only retrace a bit and not reach into this breaker block right here. Sometimes the price will do like this and then it will continue going higher. That's why, for examples just like this one, when our last swing high is kind of far from the sell side liquidity sweep, I use this fair value gap right before the sell side liquidity sweep. This right here can be used as an inverse fair value gap. If you already watched the other videos, I expect this fair value gap to be this respected and traded back into once again. So, if you remember, bearish fair value gap should be treated as a resistance and the price should continue moving lower. But I also told you that PD arrays are the true support and resistance. So once the price disrespected this 3-minute fair value gap, the price should respect it and it should continue moving higher. This fair value gap is now an inverse fair value gap. This is essentially the true support and resistance. Let's mark this already, an inverse fair value gap, since we are only using this as an inverse fair value gap. We want to see price displace above, disrespecting this fair value gap. And let's wait for that candle. By the way, we also have here an equal lows, right? And as we can see, price is still trying to go lower. But since we already taken out a lot of liquidity right here and a higher time frame sell side liquidity right here, and we also reach a higher time frame fair value gap right here, price is now trying to continue higher. We want to see a candle close above that inverse fair value gap, right? So right here, as we can see, we have here a candle close above this 3-minute inverse fair value gap. Once the price go back into this fair value gap, it should continue moving higher. It should respect our inverse fair value gap. You can put our entry right here, and you can put your stop loss below this swing low right here, or if you want to be conservative, you can use this one right here. I'm going to use the midpoint of this very long wick, placing my stop loss just below the 50% of that wick. And let's aim for the nearest buy side liquidity above. Let's use this. This is the nearest liquidity to take. We have here a buy side liquidity and we have here a buy side liquidity. Now, let's wait for price to return into this fair value gap right here. Let's see. Let's aim for maybe 1 to 2 risk to reward or this buy side liquidity right here. That's almost 1 to 3 risk to reward right here, which is a very good risk to reward. Let's see. We want to see price. Alright, so as we can see right here, price reacted right away into our 3-minute inverse fair value gap. See that? Price is already trying to reject our inverse fair value gap. Price should respect this and then it should continue moving higher. And there we have it. As we can see, we already have a market structure shift right here. We have a candle body close, which is a confirmation that the price is now trying to go higher. Now, let's try to see more price action. Alright, so price closed above. We have here a fair value gap. Let's see if the price will return into this fair value gap and then continue going higher. And as we can see, we have here a retracement into this fair value gap right here. You can enter right here. Also, we have here a breaker block. This is a 5-minute breaker block. As we can see, we have here an overlapping PD array. We have here, by the way, this is a 3-minute breaker block, and we have here a 3-minute fair value gap. Breaker block plus fair value gap, which means this is a high probability setup, right? We have here a reaction, and the price now should continue moving higher. And as we can see, the price now is trying to move higher. This is our take profit, almost 1 to 3 risk to reward. And let's see. And there we have it. Take profit hit right away. If you look closely, we almost have no drawdown. We don't have any drawdown at all. Right after entry, price shoots up higher, reaching into this buy side liquidity right away. We are take profit hit. We got our take profit hit in around 21 minutes, and now we got almost 1 to 3 risk to reward, which is a very good risk to reward, right? So once again, if the price wants to go higher, you want to see price go down first until we reach a higher time frame point of interest and a higher time frame liquidity. Go into the lower time frame, you will see a sell side liquidity sweep right here, and we should have a market structure shift if we are near the last swing high that has taken out the liquidity. If not, for examples like this, we can use the inverse fair value gap. We can enter into that fair value gap right here, and then you can target the nearest buy side liquidity. In this example, this swing high right here, and now we are take profit hit, right? So that's all for this video. I hope you learned a lot from this video. If you're having a hard time understanding this, if you're confused, that's completely fine. You can watch this video as many times as you want, right? So that's it. I'll see you on the next one. Peace out.